Hello, this is Mark from TradeInformed.com. Welcome to this video on how to calculate and use the MACD indicator in Microsoft Excel. The spreadsheet that I'm showing on the screen is the spreadsheet from my previous video on how to use Excel to backtest a trading strategy using an ATR stop loss. The data that we've got in here is from the S&P 500 and it dates back from 1950 to the start of 2013, so about 63 years worth of weekly data. And I'm going to calculate the MACD. I'm going to create some new columns and calculate the MACD based on the closed data. So I'm going to put in a column here for the fast EMA, slow EMA, and then the difference between them. And we're also going to have a signal line. Okay, so the settings I'm going to use for the MACD are the 12, 26 and 9, which are the standard settings. To calculate an exponential moving average, we firstly need to calculate the factor, which is, the formula for this is 2 divided by the number of periods plus 1. And then I can just copy this across to the 3 EMAs. The next thing we need to calculate the EMA is the previous day's average. I'm going to put that in here. We just use the simple average, the mean, to calculate this. Put this to 2 decimal places, and then the next cell we're going to start our EMA, and the formula for this is equals the close or the current period minus the previous period multiplied by our factor, and we use F4 to make this a reference cell, plus the previous day's average. Put this again to 2 decimal places. I'm going to highlight the new columns in blue so we've got a better contrast between the new and the existing information. And then we can just copy this down to all the cells below by double clicking on the bottom right hand corner of the cell. So we do the 26 period moving average in exactly the same way. We use equals average to create our previous day's average, and then we use the formula equals the close minus the previous day multiplied by our factor as a reference cell plus the previous day, and we copy this down again to all the cells below. Then we calculate the difference between the fast EMA and the slow EMA and copy this down, and then we can calculate the signal line for the MACD, and we use another exponential moving average. We calculate the average of these equals current minus the previous average multiplied by our factor as a reference cell plus the previous day, and copy these down. Okay, the next thing we would like when we're calculating a MACD is we want it to be in the histogram form. This is the most easy form to read it and to understand it, and that we do simply by taking the difference minus the signal line. And when we use the MACD for a trading strategy, we often use the crossing of the histogram as a signal for a trade entry, and in fact that's what I'm going to do now. So I'm going to put in a final column for our trade entry, I'm going to use an if function here, and the function is going to look at whether or not we've had a crossover of the histogram from negative to positive. So I calculate this if this is greater than 0, and also if this is lower than 0, the previous day is lower than 0, then we've had a crossover. And I'm going to asterisk cell just to put the word text, and if not, then do nothing. So we've got our formula here, our if formula that we can copy down, and we can see that here we've had a crossover in the MACD and MACD histogram, and so we've got a trade entry and another one down here. So there we have the MACD calculated in Excel, and also a nested if statement showing how we can use it to signify a trade entry. The next video that I'm going to do in this sequence follows on from this and uses the same spreadsheet to backtest a MACD trading strategy and see how profitable it would have been on the S&P 500. For more information and about trading and backtesting, please go to www.tradinformed.com.